Hi, everyone. Thank you very much for joining us today. My name is Stanley Dash from TradeStation, and we are privileged to have with us today Larry Williams to discuss insights into automated e-mini trading. Larry's done a number of webinars for us. We appreciate it, and we certainly appreciate all of you attending here today. Let me make a couple of quick announcements, and then we'll turn it right over to Larry. First of all, I do want to mention that my colleague Joe Ferrio is on. Joe is from our brokerage division, and he is quite familiar with the process of account management, account opening, transfers, all those details. So if you do have a question about opening an account or brokerage rules, procedures, etc., please feel free to type it into the chat, and Joe will do his best to follow up and answer on those, and we won't take any time away from Larry, and it won't distract from his presentation. And we'll also give you Joe's contact information as we go along in the presentation. The other thing I do want to mention is that Larry has agreed to do a series of live events with TradeStation, and these events will be during the course of September. He'll be in Northern California, Southern California, Chicago, and South Florida. So if you want the opportunity to spend a few hours with Larry and hear him speak live, that is your opportunity. I'm going to push the link for that into the chat area, and that will bring up the page that shows the schedule for those in-person events. As I mentioned, there's 4 different dates through September: Northern California, Southern California, Chicago, and South Florida. If you use that link, you can see the dates, and you can also get registration information right on that page. Let's see, let's get underway, but let me take care of my obligation first. Larry, of course, is independent of TradeStation, and his views on trading, the markets, risk management, those are his own, so please keep that in mind. And of course, as you consider any trade, any trading style, any particular market, consider for yourself the risks that are involved and have a plan for managing those risks. That's really critical, and we certainly encourage you to do that. There's more information of that sort in the Important Disclosures PDF that I just pushed out. That PDF, as well as the link to those live events, in case they scroll out of the chat, which they probably will quickly. There's a lot of information in the documents area at the lower right. So if you've never been with us on Omnovia before, in that documents area at the lower right, there is plenty of information, including the links that I've been pushing out. There's some information here about the Strategy Concepts Club. I'm going to go past that. We'll come back to something like that later if we have some time. And let's get right to Larry's presentation. So we're privileged to have Larry on to discuss automated trading. Larry, if you're ready, I'm going to mute my mic, and I'll just be standing by and listening and enjoying it. Go right ahead.
I'm ready, Stan. Thanks so much for having me here. My gosh, thanks to all of you from around the world. I mean, this is touching to see people from parts of my life from 20, 30 years ago and people that we've just met. Thank you guys and gals so much for coming, and thanks TradeStation for putting this on. Without TradeStation doing this, we wouldn't be able to be in the communication that we are. And by the way, it mentioned Joe Ferrio as a broker. Joe is my broker. He's a good guy. So if you do have any questions for him, he's just been a great guy for me to work with. I really appreciate what he's done. He's going to tell it to you exactly like it is, which is what I like about him. I see some things coming in that's saying no audio. So let's double check. Stan, I show my audio is on here. So we're going to do a voice check on my sound.
The audio, yeah, Larry, let me break in for 1 second. We do have audio here. It sounds fine. I'll just mention, because we do have so many people on, instead of typing this again and again, if you need to refresh, there's a white X in a blue circle at the upper right, and I'm going to use this snazzy pointer to point to it. And if you need to refresh the player, you can use the prompt that'll come up in that box, the white X in the blue field, and then it should be functional. Now, some people are saying they can hear me, Larry, and not you. So I'm going to mute again, and let's give this a try.
Okay, let's see if you can hear me now. This is Larry, and hopefully you can hear Larry now. Can somebody hear me speaking? No sound. You can hear Stan, but not Larry. Oh, you hear me now? Okay, good. All right, time to rock and roll. Good. Apologize for that. Well, what I was saying, I just thank everybody so much for being here. My gosh, it just touches my heart and soul to see people from my life from 20, 30 years ago. I've had that much contact with some of you. And some people just new to finding out about Larry Williams. And above all, thanks to TradeStation, because without these guys putting it on, we wouldn't be able to have this, what I hope is going to be a really enjoyable afternoon with one another, or morning time for you in Singapore. Maybe we'll have some pepper crab after this, huh? So I also want to mention Joe Ferry is my broker at TradeStation. Guy's done a great job for me. He's just tells it exactly like it is. So if you do have questions, I think you'll find Joe has just been a real stand-up guy for me. I really enjoyed my relationship with him. So I'm going to talk about automated trading. I know you're going to have questions as we go along. Type them in. I probably can't answer all of them, but I'm going to try my best to do what I can. So if we run into stumbling blocks, we do, but I'm going to try my best to help you with whatever we have here. So with that, I'm going to try to advance the next slide here. And Dan, maybe I need to have you guys advance the slide. I'm not, oh, here we go. Wrong button. Larry, wake up. Okay, so caution. You guys all know about the caution. I think Stan went over that, but you know, obviously you lose money trading, right? It's a risky thing that what we do. The lure of systems is really, really interesting. People have chased systems to beat the crap table roulette, the stock market, the commodity market. We just have this dream of a system that's going to grind out money. Own an oil well, it just pumps out money all the time until the oil well runs dry, because oil wells do run dry. So I think we have to be really careful about this lure of system. While do trade systems, I think that we have not been taught to be cautious enough about them, because it's a compelling idea. What, me worry? Why should I think? Just let this little thing grind out money for me. I can follow a guru. And it's all based on the assumption that the future will be like the past. And I'm here to tell you that the future is not like the past. Occasionally it rhymes with the past, looks like the past, but it's never precisely like the past. There's a system right now called Battalion. It's an ES mini trading system. I'm not going to tell you what broker it's trading at. It began trading in 2008. They've had a drawdown of 198%. That's right, 198%, but it's still trading. People are still subscribing to this thing. That's how strong this idea of having a system, an automatic system is. I think you got to be really careful about automatic system trading. It's not a panacea. It's not quite as easy as people seem to think that it is. And we get drawn into this. Oh, it was a good system, but from 2008 forward, drawdown of 200%, people still trade it. I guess they're waiting for a bounce back. It's just amazing, because systems can fail, like the oil wells that stop pumping, right? So we have to try to figure out what's going to stop pumping. So we're going to talk about that today as well. So there are elements to an automated system. There are really a lot of elements to trading. One is your computer. You have to have an adequate computer, or in my case, it's not adequate. I live in the Virgin Islands. Internet connections are not always what I would prefer. So we actually have our automatic trading strategy. I think I'm unique to any of the people with systems and trades. I actually take the trades real time, real money in my account. Joe can tell you that. So I have to make certain that these orders are there and that we're being executed. So in my case, I have a cloud computer that runs TradeStation. I have TradeStation in my desk here as well. But so I don't miss a beat. I need that redundancy of a cloud computer. That's really important because of my connections. And also, I mean, I think wherever you live, you can have connection problems. That can be a real issue. If you're going to be an automated trading system and you come in and out, as TradeStation opens up again, it won't know if you're in a trade, it'll enter a new trade. So you've got to follow the systems as well. I see that. Okay. I forget who my cloud provider is. We've checked out all of them. They're all about the same price now. They used to be a little bit higher. You just want somebody that has a lot of redundancy and backup. So you also need to understand the trading platform. TradeStation is old hat to a lot of us, but it's new to a lot of people. So you really need to understand how orders are placed. Joe can help you with that. The difference between stops and limits and fills and market orders, when market's open, and your data. This is really interesting. A lot of people aren't aware of this. The data is different in TradeStation and other data providers and brokers out there. Some people will take a holiday. We just had a holiday, right? And takes that day and treats that as a separate day. We traded a couple hours, 4 hours, and that was it. Other data providers take that day and put it into the next day so it disappears from your chart. So if you're counting days or looking at seasonal influences, think about it. It's going to make a difference. How does your data provider handle the data? There's also a really interesting thing you need to know about. We have something called the official closing price or the settlement price, and then we have a closing price. Now, in some data providers, let's say I'm referencing tomorrow if the market opens or closes at a certain price, I want to be a buyer there. But in some data providers, they have a close, then the official settlement price comes out about an hour and a half later after, listen to this, after the new session opens, you then have the official settlement price. But you're trading off a closing price that's not the official price. So you may get a signal and then it disappears because the settlement price and the closing price, which is a range, all of a sudden change. So you really have to understand your data if you're going to be developing a system or trading a system. That's important. I also think important parts of trading are selection. What market? This really important. I think there's only 3 or 4 big markets that are worth trading. E-minis, bonds, gold, crude oil. You get into cattle with an automatic trading system and you have any people following you at all, you may become the market. So I like big markets that have been around a long time. Those are the markets that I'm looking at. The problem that you can have with doing your research is the rollover contracts. You know, these contracts we trade, say the S&Ps expire every 4 months. So you have to be careful how these are pasted in together to create a continuous contract. So that's another advantage. Like an example, hogs can have a big gap between one contract to the next contract, but the E-minis, bonds, gold, crude oil don't have as much of those gaps. So it's a little easier for us to trade in those markets. And also, there's a great question of Forex. I don't trade Forex. I think the commissions are too high. It's not the market you think it is. It tends to be a very public market where, yeah, I think the odds are against you. So I would prefer to trade Globex and ICE markets because those are regulated exchanges, and I just think it's a whole lot better deal. Okay, you want a market that's volatile, that moves a lot. You don't want a market that just sits there. Well, gold, bonds, stocks, crude oil, they move a lot. So that's not a problem. And of course, the consistency of the data in 2 respects. These markets are consistent in their seasonal patterns, the end of the month patterns. They have a consistent way that they trade. They're not as erratic as, say, natural gas or a spread between the Canadian dollar and the US dollar. That can be very erratic. So yeah, I don't trade Forex futures. I'll trade the Canadian dollar. I'll trade the British pound or the Australian dollar on its own. But when you start putting that into another relationship, I think you just make it more confusing. And this is just me. For me, it's got to be really simple to make it work. I'm not a rocket science guy. So to me, it's all about simple, simple, simple. And I don't want to have a maximum margin. The Forex people say, well, they give you 20-to-1 margin. Well, that's just, you're going to lose your money with that type of margin. So that's money management, which we've covered at other comments on other webinars I've done for TradeStation. So you can go back and look at money management, but that's a really critical point. Okay, so next point is the time frame. I don't trade intraday. I have, it's a lot of fun, but I don't think there's big money there. Why? Because you're in today and out today. You can never catch a trend. Trend is caused by time. All profits are the basis of trend. Trend is a function of time. If you don't have time to be in a trade, you cannot catch a big trend move in a day. So to make a lot of money in a day, you have to have a big position in the day. And a big position means you can have a big loss. So I prefer to have daily charts, maybe catch a move of 2 or 3 days. We just had a buy signal on Tuesday morning of this week. We got out yesterday and again today on the opening in the system we'll be talking about today. So I like to catch those moves. Those are pretty profitable moves. My average profit per trade can be larger when I do it that way. Data issues talked about. This was a tough one. Personality issues. You may not have the personality to be a system follower because you want to do something with the system, tweak it here, tweak it there, second judge the system, override the system. So it may not be your personality, and it doesn't matter if it's my system or anybody's. If you keep dancing around with it, it's not the system, and you're not following the system anymore. You're following into no man's land. So, that's something you have to think about yourself. Also, your time zone and your schedule. I live in Australia for almost 3 years. I finally learned the best thing to trade there was place my orders, go to sleep, wake up in the morning. And using day charts to do that, it was very, very successful trading. So you have to think about your lifestyle and your work style, your time schedules in these markets as well. Now, again, I see we're having a sound problem, and I apologize for that. We did a webinar earlier today on my forecast for the rest of 2015. We didn't have any audio problems. So I really apologize for whatever's going on here. Okay, so we get through all that stuff, right? And we're still not to trading yet because you have to really understand what's going on here. The number one cause of failure, and I want to talk about failures. I can tell you all about the profits, whoopee, but you better deal with failure because you're going to have it. You're going to have losing trades. Number one cause of failure is probably false expectations that we can make profits by establishing goals, because everything in our life, for the most part, we establish goals. I want to run such and such a race at such and such a speed. I want to have X number of customers for my product, right? Well, that works in that endeavor, but in the market, it does not care about your goals at all. It doesn't care about your wants and needs. This is not about you. This is about the market. And most people have goals that are so high, when those goals don't materialize, they get frustrated, they get anger, they get on the wrong side of the market just because their goals were not correct. So why do I like daily bars? Well, time is money, right? So the more time in a trade, the more money I can make. The data is consistent. I've seen intraday data where suddenly the markets have a massive move in a second. They may change that price tick, or it's not as reliable as daily moves. And of course, the hours are known, so I like that. And most of my fills also tend to be at liquid times. I don't have that problem of trading at 2 in the morning when I may not get filled on a decent sized position. So that's another thing I like about being on daily bars. So elements of automated trading, there are probably more approaches than there are traders, but it really all gets down to a couple of things. There are only really 3 types of ways of trading the market. There's trend, anti-trend, mean revision if you will, or conditions set up markets. I'm going to buy a market because commitment of traders, because there's a cyclical low, some condition. But those are really my stuff or anybody's stuff. It's really going to get down to one of those things. Well, look at some results. Here's an equity curve of a system I created a little bit ago. Wow, that's really nice, isn't it? It's a really powerful looking system. Or is it? If we look at the results, it's been 100% accurate on 53 trades. That looks great. And this is on an ETF, $219. That looks great. But oh, wait a moment. To make that money, you have an open profit right now in a trade of $169. So while the equity curve may look good, like, oh yeah, I'd trade that, you need to really get into these statistics and see what's there. How good are these statistics? Drawdown, average profit per trade. I get probably 3 times, 4 times a month. Somebody says, Larry, I've got a great system. Would you put up money and trade it, or would you market this system for me? Invariably, I look at it, and what I see is the average profit per trade is maybe $90 or $140. That's not enough. The average profit per trade, $188, well, that's pretty good. That's an individual stock. But in E-minis, if your average profit per trade is just a couple of $100, by the time you miss a trade or two, have some slippage involved, it may not be as successful as you think. So this actual equity curve I'm showing you now is a system I am working on, but am not trading. So this is not actual. Now in a moment, we will be looking at actual because that's why I really do trade this stuff. Okay, here's a system for trading gold. This is a system that we've been systematically trading for some time, and the numbers look pretty good until we start to look. The numbers here look good. Average profit 2.45, accuracy 88.1%, average profit per trade $521. Hey, that looks good. But this doesn't look so good. This system did really well until about here, and then it started to fall apart. Like the oil well, it starts to run dry. And all systems start to run dry at some point, mine or anybody's. Look at the turtle trading strategy. Works really well, but it went through, what, a 3-year drawdown period? Well, most people can't live through that. So these things come and go, and I think you need to have the ability to adjust. I'm going to show you how we can adjust to that in a moment. But there's nothing wrong with this system. It's had a pullback. It'll probably start to move. But why is this happening? We need to know that. I think there's an answer to that. Here's a sample of see the actual buys and sells. And I took these signals. These are real signals. But what happened in that equity curve was we were in a big uptrend. So the buy signals worked really well. Then recently, we went into a downtrend in gold, and the buy signals have not worked so well. So what happens when a system starts to wobble on you? Do you update it? When do you update it? Do you get rid of it? What do you do with it? Those are questions that we need to know. Yeah, Boris, is a great question. How to distinguish between temporary drawdown and a complete system failure? How can you tell that? Well, you can do that in a couple of different ways I'm going to show you today. First, this is a system, an E-mini trading system that I have been trading at TradeStation. So we started somewhere back over, I think, maybe over here a couple of years ago. This is one we've actually taken every single trade. This just shows the TradeStation performance here, okay? So we've had an equity dip here, we had an equity dip here. There are a couple of ways of handling equity dips. First way, once the equity dips and comes down, stop taking all those trades until the equity curve comes back up. That's a real simple rule, right? So if the equity curve itself falls below a 30-period moving average, stop trading until it comes above a 30-period moving average. That way, if the system never comes back, you're always going to be on the sidelines. You'll never get back into the system. So that's one thing you can do to avoid a total system failure where the system just comes straight down. That's probably the easiest thing. Now, here's what actually started to happen in that system. It started to deteriorate. Not the first rodeo we've seen. We've seen that before. No pointer visible. That's a good thing. Let me see if I can get a pointer for us here. Let's try that. That pointer is visible now, I'll bet, right? Okay. Can you see the pointer now? Still see no pointer. Okay, let's try another pointer. I'm glad you let me know that. So let's try this. How about this?
That works.
You can see this now. Good. Okay. Thank you. Sorry about that. So these are real trades. So the market pulls back a little bit and the trades don't work for a while. And all of a sudden, just when you probably give up on it, they start to work again. So how much of an equity dip do you need to have to stop trading? Well, we know from the past test of the equity dip, let's say an equity dip is $15,000. So if it goes much beyond that to $20,000, something's wrong. You have not seen that large of an equity dip before, so you'd want to, I think, exit the system. So what changed in all this is that we go into downtrends. For the most part, my experience is that it's a lot easier to find buy signals than to find sell signals. They work a whole lot better. So what typically happens in a system, it runs into a large trading range. It's not in a trending market anymore, and things start to change quite a bit. And that's the point where you say, well, are things changing? And the answer usually is, yeah, trend changed. And the system, even though it may not have been based on trend, let's say it's based on a seasonal influence to buy at the last trading day of the month, which is a really good strategy, by the way. It's a really good strategy. But in a bear market, it's not such a good strategy. So most of your signals you can make more effective by putting them in a downtrend. If it's a sell, just don't take the sell signal willy-nilly. Put it, in fact, when the market is in a downtrend. Do you do back tests before going live? Yes and no. I do some things I believe in so much that I don't feel I need to have a large sample size to prove it. These are things I've traded for over half of a century now, 53 years. So those are old friends of mine, and I don't think I need to back test them. But if I have a new idea, like we've got some new things we've been trading this last year, yeah, I back test them thoroughly, I think thoroughly, right, to tell me. Oh, what a great question, Boris says. Do you have some indicators which can predict if the following day would be trending or choppy? Not much, but small range days tend to create large range days. So a small range day, the market's congested, the next day should be a large range day. So you'll have trend movement on that day. That's one thing you can look at, Boris. In TradeStation, we have an indicator called blast off, which is based on a couple of things. When blast off is very low, you're going to go into a trend day. And when it's very high, you're going to stop a trend day and you're going to go into a congestion or trading range day. Well, Larry, all my systems getting smarter. It seems like some systems are the new floor traders. They too often run for your stops. I haven't found that. I think it feels that way more than it actually is. Next question here, how far back do you research your data? That's a great point. This is a really telling point. I go back now to 2002. I stopped there. Why? Because it all changed in 2002. We went to electronic trading. And markets don't trade now like they did in the old pit sessions, which I cut my teeth on, pit session markets. Pit session stuff doesn't work very well anymore because we're in electronic trading. So I think that's the starting point, the demarcation for our trades in terms of time. Well, here's a trade. I'd like to show you a trade that I'll trade with. How typically do systems implement concepts of support and resistance? Charles, I don't know because I don't believe in it. I really don't believe much in support and resistance. I have looked at it all these years, and I can't put it together. I know it should sound like a great concept, but if people draw lines on charts, and I've seen markets stop there, I've seen markets fall apart there, fall below there, come back up above there, I just don't have any credibility in supposed support and resistance. That's just me, but the way I see it. So here's a trade. This is the E-minis, and notice at this particular time, our seasonal pattern right here is really strong for a rally in this market. I'll give you the trade in a moment here. But if I see a strong seasonal influence in a market, I want to try to take advantage of that because I know that's been in there month after month, year after year. So I'm looking for that as perhaps an opportunity to set up a trade. Do you have a monthly drawdown limit before you stop trading? Again, my limit would be if I'm like 1.5 times drawdown with max drawdown we've seen in the past, something's wrong with the system. What do you believe in? I believe in seasonals. I believe in trend. I believe in patterns, as we'll be discussing today. Now, the pit sessions, we use the openings a lot. You're right, but we don't use openings anymore because they're not as relevant. We close, we open 20 minutes later. What are your views on market profile and candlesticks? I don't use them. A lot of people do. A lot of people love them. I don't. I think that candlesticks make it even more confusing. I would prefer to look at open, high, low, close chart. But again, that's what I cut my teeth on. We have programmed the candlestick pattern, and I can't make them work. So they're an art form, but can we make them into a mechanical trading system? I have not been able to do that. A lot of questions here. So market profile, same thing. This morning you said natural cycle is better than seasonal. Yeah, my natural cycle is the way I forecast markets. It gives me the market highs and lows better. For your S&P trading, you taught us to refer to 9-day moving average of trades. Yes, so here's another example. Michael says, one of my things I like to do is compare the S&Ps versus bonds. If bonds are really strong, buy signals work better in the E-minis. The bonds support the E-minis. So little things like that can be used for trading rules as well. That's just one example of them. So here's a trading example. It's April, and the trading day of the month is greater than the 13th trading day and less than the 17th trading day of the month. I want to be a buyer in the market. Why? Well, go back and look at your charts. Around tax day in April, that's when Americans pay taxes, April 15th, the markets rally. Now, some years April 15th is a Friday or a Saturday or a Sunday or a Monday. So we need to narrow that down by getting rid of calendar days and looking at trading day of the month. A month can only have up to 23 trading days. So we want to be a buyer. Trading days got to be greater than 13, so I'd be buying trading day 14, 15, or 16, and less than 17. If at that trading day of the month, that's when we usually rally, and I'd like to take those buy signals in the E-minis at that time. Ichimoku, I can't even pronounce that. Those charts, same thing. There's no magic to charts. Get this through your skulls. Charts don't move the markets. Charts are a reflection of traders' emotions. Markets don't move because of charts. Conditions cause markets to move. Now, there's no magic in all this stuff, all the charts. Let's get to the conditions that cause markets to move. Okay, our next little slide for us. In the last 13 years, that's been 85% correct. That little pattern I just gave you, the average profit has been $650. So that's really good, isn't it? We see a real sweet spot for trading around the middle of April, around when it's tax time, right after people pay taxes, the markets rally. So there's an example of a trade that I'm willing to take that trade. The average hold time is a couple of days here. We'll be talking more about hold times and stops in a moment, so just bear with me. This is, of course, the E-mini. We're talking exclusively about the E-mini. Now, here's a pattern I've been trading for a long time, 45 years, something like that, probably. So let me share it with you. In this pattern, I have a day, this day right here where the red ball is, makes a higher high than the prior day, and I made a higher low than the prior day. So it's what we would call an up range day. But it closes here below the prior day's close. A lot of people call this a key reversal day. The market ran up, slammed back down, and they say, it's a market top. Oh my gosh, it's going to collapse. Maybe. But if you look at your charts, you'll see that's not how markets top and bottom very often. Occasionally they do, but certainly not very often. So when I see that pattern, I like to be a buyer the next day at the prior day's high right here. So there's the pattern, up range day, down close in an uptrend. I want to be a buyer tomorrow at this bar's high, and that's exactly what took place this day. Bought there, the market came back, closed here, and then, well, wow, 3 nice days in a row to the upside. Question, why the E-mini rather than the NASDAQ? I've been trading the E-mini since it started trading, since the first contract traded, I've been trading it. So I think I know it better. The NASDAQ's a little more volatile, maybe a little more violent. The Russell index probably has a little better liquidity than NASDAQ does. We had another one of those supposedly key reversal days right here. Obviously, the market didn't top like the books say it does. We would have been a buyer at this bar's high over here. We just didn't get there on that day. A lot more liquidity in the E-minis. Since 2002, there's only been 14 trades like what I just showed you, but they've all been winners. So what I try to do, and I'm still having troubles with this because trading is not a perfect game. I'm trying to just find trades that are highly profitable or highly successful. So I don't really care to trade a lot anymore. I did that when I was a young kid, a lot of fun. But I really want to focus in on when I'm going to maximize my trades in terms of profits and in terms of the size of the trade. So if you wanted to have the pattern trade at that, you would have an up range, higher high and low, and close less than the prior day's close, and the prior day was an up close. That's the pattern that we've just been looking at. Then we're going to buy at that day's high. But I don't. Some days of the week are better than other days of the week. So I don't like to be a buyer on Monday with this pattern or on Wednesday. Now maybe that's a little too exclusive, but I don't like to do that. I think some days a week are better. So Joe says 14 days are not, 14 trades are not statistically significant. And I say, yeah, maybe not, Joe, bear with me. If I walk outside my office here and a great big Great Dane is out there and bites me in the leg and I go to the hospital and get it fixed, I walk out after my surgery's healed and I see a great big Great Dane there. Do I have to do that 30 times to prove it? I don't think so. So I don't think we have to, for everything, have any statistical significance to it. If it's like something I know, I've traded this pattern again for 45 years, it's a good pattern. Okay, I know this baby works. I don't care. Years ago, I developed a system trading coffee. It had like 1,000 trades in it. Yeah, more trades than you shake a stick at, right? Started trading, it blew up right from the get-go. So I kind of lost a lot of faith in statistical significance, saying no, the condition is more important than just having a bunch of numbers. So I see that we're moving, I've lost some questions here. So let me try to get back to questions and try to answer those questions for you. Okay. Oh my gosh, a lot of questions. So we're going to talk about stop losses in the morning. I want to show that to you. Isn't gold coming into a seasonal bullish time now, Larry? Yes, it is. And seasonals work sometimes and don't work other times. This really the secret to seasonals is not to take them all the time. You really have to look at other conditions. Yeah, this year the seasonal gold, I don't think it's going to work. I think later on this year we're going to have a seasonal rally in gold because I have a cyclical low coming up. But I really want to confirm a seasonal because a seasonal is not a standalone indicator for a market to be a buyer or a seller. I really want to have that confirmed. Do you use optimal F? Did not use optimal F. I used Kelly ratio when I won the World Cup Trading Championship. If I was 30 years old, would you again start trading? How would you start? Oh yeah, this is of course. I would have started 10 years earlier. This is all I know how to do. I'm not good at much else. So yeah, I would start trading it. I would probably make the same stupid errors I made in the past. I would want to learn about money management quicker, learn not to take big risk quicker, learn that conditions cause markets to move quicker and that charts don't cause the markets to move, just the stuff we're talking about. Do we take the buy only the day after the key reversal day? Yeah, we want to be a buyer just the day after the key reversal day. How to use optimizer tool? Well, we're going to show some optimizer stuff in a moment. So how did I discover this pattern? Just looking at charts. Have you tried scalping? Yes, of course I've tried scalping the yes, but there's no big money in it. There's no joy in it. So it's a very frustrating thing to do. What else can you say about when you won the World Cup? Well, the year I won the World Cup is the best year and worst year of my life. I was not a very nice person then. All I did was focus on the markets. I had no life outside of trading. And I was probably an arrogant SOB, and that's being complimentary to myself. It takes that type of focus to trade at that level. You're not going to walk up to a baseball pitcher and while he's pitching and try to say, hey, honey, can we go out for dinner tonight, right? It takes so much focus to do this stuff. So I was very focused. I held a very hot hand, and maybe because I was so focused. So that and I used a very aggressive form of money management, the Kelly ratio. So that was a combination of what really created the win. My win's meaningless that I won. Maybe I just got lucky. It really means nothing. What I'm more proud of is to see that year in and year out, it's my students that win the trading championship. Year after year, those guys started with Larry Williams. That means a lot more to me about we can do okay in the market than Larry had a big year one year. We'll get to stop losses. What's the static? We're going to get to stops in a moment. What's the significance of day of the week? Well, some days are a lot better. You've all heard about turnaround Tuesday, right? Markets tend to turn around on Tuesday as they did this week. As I said, we had a buy in the opening Tuesday morning in the mechanical system that we trade at TradeStation, in part because it was turnaround Tuesday. Okay, let's go look at a couple more things. This also took place this week. Interesting because I had done this PowerPoint quite a while ago. We had 3 consecutive down closes. The last 3 closes were down, down, down. Okay? And that sets up a buying opportunity a lot of the times. So 3 down closes, but today's close, the last of the 3 closes, down closes, is greater than the prior day's low. I wonder if I can draw this. Bear with me. I want to see if I can draw something here. Let's see if I can draw this. Oh, hopefully I can do this. So, not very good at it, but so here's a close, and here's my 3rd down close, right? And it closes here. But notice that the close, the last 3 must be greater than the prior day's low. Well, the prior day's low is back here, right? So this market is still free falling. That's not the trade, the pattern that I want to trade. See if I can clean this up now. Yeah, good, I can do that, amazing. Okay, so what I would prefer to see is this down close and another down close, but this close is within the prior day's range. It's above the prior day's low, isn't it? So that tells me the market's not in a free falling safe. This is something I learned from my good buddy Tom DeMark. A really helpful insight into the marketplace. So if I get 3 consecutive down closes and I have not had this close down here below the prior day's low, that intrigues me as a potential trade in the marketplace. Natural gas seasonal did not work last fall. Yeah, a lot of times seasonals don't work. That's why you need to do more than just trade off just a seasonal pattern, in my opinion. There are ways to make seasonals work. We cover that. In fact, when I'm doing the run around the country for TradeStation this fall, we'll be talking about how to make those seasonals work. Okay, so here's a view of that pattern trade. This close is, I need to get the ball on here, don't I? Sorry. This close is lower than the prior day's low. We've had 3 down closes, but it's lower than I'm not going to take the trade. Here I've had 1, 2, 3 down closes, and this closes it within the range. So I really want to take that trade. That's what I'm looking for in the market, that it stopped that free falling thing. Oh my gosh, look at all the questions that have come in. Are you an advocate of the Trader's Almanac? Yeah, gosh, I go way back with the Stock Trader's Almanac. Yale Hirsch and I have been friends for almost 50 years. His son Jeff is a friend of mine. I taught Jeff how to fish in Montana when he's like 6 years old. So there's a lot of value in the Trader's Almanac, yeah. Question is trying to find patterns to do data mining with large numbers of permutations. I think that's a waste of time to just run numbers in a computer. These numbers are like prisoners of war. You beat them up enough, they'll confess to anything. I'm looking for a condition in the marketplace. Some unique, wow, 3 down days, the market's probably going to bounce. Or my percent R is in one level or another level. That's what I'm looking at. Again, that pattern that I just showed you hasn't had many trades, 21 of them since 2002, but it's been 90% accurate. You never come to the East Coast? Yeah, I'm going to be in Miami, and I'll be at the Vic Niederhofer's spec party in New York City. Well, Ralph Vince and I are going to be there. Question. Give a presentation about automated trading. All the patterns are too simple. I can code them and show you many places with where they don't work. Well, then show me, because I trade them. I don't think you can do that. Not with the patterns I just gave you, and with my entries, and with my exits. It's too simple. I apologize. I don't want fancy stuff. Remember that. I'm not the fancy guy. I don't believe that moving average stuff really makes really good systems. That's my belief. And we all trade differently, right? So if I can have a collection of these patterns, maybe 30 or 40 of them, I can then start to have a trading strategy. That's how I do it. It certainly doesn't mean it's the best way to do it. That's just how I do it. There's another one, 2 consecutive down closes in an uptrend. Well, this is what we like, right? The market today's low is greater than the low 10 days ago. And I've had 2 consecutive down closes. So we're in an uptrend and we have a 2-day pullback like we just had in the bond market. 80% correct. That's on 178 trades, but the average profit's pretty small, $165. We'll get to the axis, bear with me. So that intrigues me. $30,000, 80% correct, but $165. So what do we do? How can we look? Can we understand the markets a little bit further? How many stocks do you run? 10 or 20 or less? No, not that many. So was the close prior to the first down close an up close or a down close? Let's go back to the rule. So I'll go back one more time here. We had 2 consecutive down closes and an uptrend. That's the rule, right? Well, what about the first close before the 2 consecutive down closes? Was it up or was it down? Does that matter? Oh yeah, it does matter, as we see from this. If it was an up close, we have 82% accuracy, but it's $152. If it was a down close, we have 86% accuracy at $469. Here's my point, guys and gals. Once you find something that is profitable or relatively profitable, you need to look further. You need to look at relationships of ranges. Are we in a free-falling market? Are we in a congestion market? And you can't do that with people who say, well, I'm going to run a 10-day moving average across the 5-day moving average. See that, you'll understand that, hey, there are little things going on here that show me this is going to be a better trade. That's what you test for, not what moving average should I use, because moving averages by and large fade in and out like crazy. So look at how the market structure is. Is there a seasonal pattern that would confirm this buy signal? Are the commercials buying at this time? That's what's going to make this stuff work to a very high degree of accuracy. Okay, if we just take that trade buying on Tuesday, wow, we got all winners. Buying on Friday, we have 90% of the trade winners, because one of my concepts is that some days of the month are better than others. Hold on, there's a long question here. I've got to read it. Yeah, sometimes my stuff is overwhelming. I mean, this is what I do, you know, but the markets can be overwhelming. I guess because this is what I do full time, it's not overwhelming to me. And some of these ideas are new to you people. They've been ideas I've had for many, many years. So they're like seeing my kids again, right? And giving a big hug. I know them. So these are just new ideas I hope that you can start to use a little bit. Trading is extremely difficult. Don't buy into the simple stuff. All us traders will be on the beach. Yeah, trading is difficult, and what makes it difficult is the emotions as well as, you know, it's hard to find good stuff like this. It's really hard. We buy it on Wednesday, same pattern, works okay. So see, I want to add in, oh, we've got a pattern. Well, I want to look to be a buyer on turnaround Tuesdays, or maybe when Friday fade outs, you know, so I still want to go to another level. I don't just take a pattern and go, okay, I'm happy with that. I still like to trade it to another level. These highly accurate trades are hard to find. When I show them to you, they look really simple right now. Well, it was not so simple to find them. I learned them from trading in the old days. You know, the way I grew up, we charted at the end of every day with a pen and pencil, a straight edge, a ruler, and we drew our charts. And boy, when you look at charts like that, you start to see things you just don't see on your computer screen. So that's the way we got to a lot of these. I'm going to get to exits in a moment, guys and gals. Bear with me. We're going to get to that. Exits. Exits are like fighting. Protect yourself at all times. You got to protect yourself against a knockout blow, against a large loss. That's what you've got to do. And it only takes one big loss, you know, and you're done. So I have stop losses. I use them all the time. They're always resting in the marketplace. They're there because I'm not 100% correct. Larry Williams is as ineffective of a trader at times as the worst trader in the world because I have a losing trade. So anybody can have a losing trade. I don't have all winning trades. No way. So I know I have to protect myself. And I know for me, may not be for you, but my confession to you, or my weakness to you, is that when I used to say, well, if it goes to that price, I'll get out. We called that a mental stop. I went mental. They would go to that price and I'd say, well, it'll rally back, I'll get out. It would rally back and I would say, oh, it'll rally higher, I'll get out, and then it would collapse. I really could not make a mental or desk stop effective. That's my weakness. Might not be your weakness, but that was my personality. Speaking of that, if you really want to learn a lot about trading personalities, my son's a psychiatrist at Johns Hopkins. He's written a book called The Mental Edge in Trading. A lot of valuable research because he interviewed and did personality profiles of just the largest winning traders. And they all have a couple things in common that we can adapt into our own trading style. Oh, some of you read about good. Yeah, well, so what's your thought on trend following automated strategies? Trend following strategies work, but they may go into a drawdown of 20, 30%, and they may not work for 2 or 3 years. So yeah, they work, but to be in a trend following system, you have to be in 20 or 30 commodities because you don't know which one's going to have the big rally in it. It means you have to have a basket of commodities, and most of you don't have $300,000-$400,000 to follow a trend following system. That's my overall assumption of it. Okay, so exits. Where to get out, when to get out, when to hold. Let's address these issues. Where to get out, when to get out, and when to hold. Where to get out? Well, you're going to be wrong. So I like to use the lowest low of the last X number of days, or an extraordinary move away from the market. If the average range, as an example, has been 100 points, and suddenly we have a 200-point range, well, that's an extraordinary move. By and large, 90% of the last 3 days range, if the market moves that much from today's opening price, you're starting a new trend. So we're looking for an extraordinary move against our position. You could do a default of the average range of the last 3 days, take 90% of that, and you can use that as I got to get out at this point. Now, sometimes that point's too many dollars away. It might be $8,000 away in a position. Well, that's too big, isn't it? So I don't want to have an $8,000 loss in my E-mini trading. So we have to look at other things for where to get out. But there's some ideas for you. Time or profit and loss are the big things. I think these are the most important things. And so let's look at time. We're reading a question here. Time or profit loss. Markets are highly but not exclusively random, which I think means you must give the market room to roam. So if your stop is real close, you're going to get stopped out a lot. You're going to get paranoid. You think they are going for you. It isn't true. It's just that your stop is so close, you get stopped out, and then the market moves back in the direction it was going. You need to give a couple of degrees of freedom to the market. You need to have a stop that gives the market room to roam. So I think that's really critical. The closer the stop, the more you're going to be stopped out. So I don't like close stops. That's just me. My stop loss thinking is you must use them. Small is bad, large is bad, good is me. You suggest for timing. I don't know by timing you mean long-term stock market highs, short-term market peaks. You know, it depends on what your time frame is of reference there. Big traders absolutely run your stops. Terrence, I don't think big traders run your stops. I know big traders. One of my friends was the largest bond pit trader in the history of the world. I know these guys. They've been friends of mine, okay? They don't run for your stops. Occasionally, of course, that might happen, but as a general rule, day in, day out, no, it doesn't take place. You can disagree with me as much as you want, but you don't have my 53 years of experience. You don't have friends that traded on the floor year after year after year in massive quantities. So dispel that notion. And even if it is true, I'll take your side of the argument from and say, oh, it's true, Terrence. You know what? It doesn't matter. You still have to have stops. You still have to be able to protect yourself. So let's look at the problem with running a stop. Here's the whole thing to it. You drive prices down and to try to get a stop if that's what you're going to do. Well, what if other big sellers come in there? Now you're selling into weakness. That's the worst position to be a seller, isn't it? To sell into weakness. So to go for your stops, I've got to sell into that weakness. So I sell into weakness, and now I'm selling at the worst possible time I could be a seller. Okay, let's go on. Here's an example. Here's a test of the E-minis, and this is going to be applicable for all you E-mini traders. We ran stop losses from $900 to $3,000 on this particular system that I trade at TradeStation, right? And we see that at $900 stop, yep, you're only 57.9% accurate. At a $3,000 stop, wow, your accuracy is 80%. However, you only make $183,000. At a small stop, you made $127,000. So that it makes money regardless of your stop. But here you don't make as much. Here you don't make as much. The ideal stop is about $2,400 in this set of data. Has high frequency trading impacted any of your trading strategies? No, it hasn't at all. I think 6 of the 8 high frequency trading strategy firms lost money last year. There's another myth about how much money these guys make. Some do, some don't. And again, it doesn't matter because they're in and out in a flash second, right? And I'm getting a trend trade in the marketplace of 2 or 3 days. Like I said, we had a turnaround Tuesday, down day signal on to buy the opening on Monday. Look what happened. Then we had another signal. We bought the opening today. And now we've got a nice trend move with us. So we're capturing larger trend moves. Okay, so the stops are important. I like a stop if it's too big. When you get hit, you can't make your money back. So in the strategy we trade at TradeStation, our stop is $1,900. Now we can change that in a couple of examples. There's no straight path to heaven than any system. You get that notion out of your mind. You're going to have equity dips. You're going to have losing trades. It's like marriage. It isn't always good. You live with each other and you get accustomed to that. The road's always rocky, and usually, especially when you start trading a system, and because you're very nervous about, I'm going to lose my money. I don't know what I'm doing here. So you have to kind of step back a little bit and say, okay, I got to live with this thing a little bit. Now, I want to go back to a slide. Let me make certain I don't have this slide. Yeah. Here's another point I want to make on exiting trades. When to hold. This is a really critical point for you guys and gals that are developing systems on your own. This was one of my really important breakthroughs I had a couple of years ago. So I've got all these patterns. I'm a pattern trader by and large, right? And I was using the same exit. I'm going to exit on the first profitable opening after being in the trade for a day, or some rule like that. Well, I'll give you a rule in a moment here. But what I found is some of these patterns are so strong I can hold for 2 or 3 or 4 days. They're really strong blast-offs in the marketplace. Others, I better get out on the first profitable opening. So once you find a pattern, again, I'm a pattern guy here, or maybe it's a moving average crossing a moving average. Once you find that, and it's a successful strategy, you need to test to find out exactly how strong that pattern or that signal is. Some are stronger than others, in other words. Does that make sense to you? So you want to drop the weak ones and get the ones where you can hold for a day or 2 or 3 days or whatever the time period is. So that's one way of improving your approach to the market. The other way is once you find those patterns, we've looked at the upside of it, well, let's look at the downside of it. And the patterns that look really good to you, how often do they dip more than X number of dollars before you get out of the trade? Think about this for a moment. It's a really great concept. So let's say you found a pattern, looks pretty good, makes $500 average profit per trade, but in further inspection, you see that it dips down $1,000 average per trade before you get to $500. Now you go, well, wait, that's not as good as a system maybe has a $400 average profit per trade, but the maximum dip it's ever had has been $200. So that trade goes boom, boom, and it goes to the target profit. Whereas the other one, you end in, it goes down and down and back and forth, and then it goes to the profit target. So once you find something, a lot of what I hope I can accomplish here is to help you understand and learn about the markets. Once you find this stuff, you want to look at and see which one is which side, how does both sides of this trade work? The move against you and the move in your favor. Oh my gosh, so many questions here. How do you test it and revise it? We're going to get to that. So bear with me a second here. So this is actual trading. We started trading this 2 years ago at TradeStation. Gosh, did really well. About 6 months ago, it started to wobble on us a little bit. Do you have a book with these ideas? Probably out there someplace, some. Um, though you are automated but focusing on cyclicals, it is accuracy at times you must turn off your system, or is the strategy? The strategy always runs. The strategy is always running. We're doing something right now, tonight. But I will look at the system and say, I don't like this. I don't mind sitting through a drawdown, but what's going on with the system? So then what I will do is go back and say, little deterioration here. Why is that? And I'll look at it, and I will drop out patterns that haven't been as successful. And hopefully I found other patterns that are more successful in the time period. I'm talking more about that. What about the strategy when there's major news coming? News? I don't even read the newspapers. Because these signals in the past didn't look at the newspaper, did they? No, they didn't. Newspapers scare you out of positions. All the research you guys and gals do, you don't program in there the headlines of the day, do you? So I don't know how headlines of the day play into a system. I'm looking at the little things that I look at in my system. You avoid holidays and certain days. I avoid certain days. I love trades around holidays. So in the 2 years out of sample, we see that actually the best stop is right here at that $1,800 to $1,900 stop. The last couple of years, that made $34,000. That's pretty good. I'm happy with that. So I see there's my stop that I like. So I know my stop is going to be in that ballpark. So then I make some changes. Actually just deleted a couple patterns that weren't holding up. I added some new patterns. I learned there's a great buy point around the FOMC meetings, like there was this time again, and some other stuff. I hope I can still learn a little bit at my old age here. So I will add things to these systems and try to fix it, make it better. Well, now we started trading it, and here it is. Oh yeah, well, it's doing really well. Though it looked like, back here on the last chart, it had a little equity dip right there. Okay, not going to bother me. And now with the trade we just closed out and the one we just put on, we're going to be at a new equity high here. You talked about stops. What about targets? My target tends to be to get out after being in the trade X number of days. I don't know how to make an effective price target. Isn't because I haven't tried. I've tried. I just didn't. I wasn't able to figure it out. Ralph Vince and I, way back in 1987, when I won that World Cup Trading Championship, developed something called bailout, and it was to get out on the first profitable opening. And I've now delayed that. So I will get out on the first profitable opening after being in the trade X number of days. So I may be in the trade for 2 or 3 days. Obviously, as I talked about earlier, some patterns are stronger, so I want to stay in that trade for maybe more than 1 or 2 days. And other patterns are weaker, so I want to be in that trade for the first profitable opening or the second profitable opening. So that is my approach to I think a time entry for a short-term trader, not a long-term trader, but for a short-term trader is really. Oh, more questions. What's your risk-reward ratio? Take profit versus stop loss? Well, as you can see, my largest stop loss where it has be $1,800. My accuracy is somewhere in the 80% area, and the average profit is about equal to the average loss. Yeah, good point, Don. The book I recommend is my son's book, Dr. Jason Williams, The Mental Edge in Trading. Reminiscence of a Stock Market Operator is also a great book. It's a good read, a good historical read. No trailing stops. No, I don't like trailing stops. I'm going to be out of the trade in a couple of days because I am a short-term trader. right? And I do have my dollar protective stop. I found that actually tests out better than trying to increase my stop intraday and all that stuff. Can you go into zero balance? I haven't used it for a long time. What do I call a profitable opening? Anytime the market opens greater than where I bought, that would be a profitable opening. It sounds like I buy today and get out tomorrow. Not necessarily. I may have bought today, the market declines, closes, opens lower, has a big rally tomorrow, then gaps open higher and I get out. So I could be in the trade for 3 days. It doesn't necessarily mean that I'm going to get out tomorrow. It may take a while to get out of that trade. So here's the signal we had on Tuesday. You can see the recent one. Well, why did we have it? Well, we had 4 consecutive down close and it was turnaround Tuesday time. And we got out of that trade yesterday and then went long today on the opening today. You can actually see the trades here. We had a buy here, got out up here. We had my big money buy signal down here. It's a pattern I've been trading forever. Got out of it over here. Bought here, got stopped out over here. Bought here, got out. So you can see the type of trading that we're doing here. Can you see the entry in TradeStation was for exit? A great question. No, I don't know how to see that, Robert. I wish we could. Maybe Joe or somebody can tell us how to do that. We have not been able to figure out. I would like to know, oh, I'm going to be a buyer in the opening tonight in the S&Ps. We don't know how to do that. My bars are based on the 24-hour bars. That's a great question. Thank you for that. Any recommended readings in the trade on the subject? Yeah, you know what? Read anything by Tom DeMark, read Jake Bernstein's stuff. Look at charts. Look at charts. That's the best thing. How did I learn this stuff? Looking at charts. Trading it, looking at charts. That's really good. Would these same systems work on crude oil? Oh, yeah, the same ideas work on crude oil. Do you think the large percentage of your accuracy is due to large trends of the minis from 2000 2008? Well, you know, we had a big bear market. We've had some sell-offs. We've had some rallies. Actually, my best streak in the market was on the long side in 2008. So I don't know that those things matter all that much. The title is by Jason's book is The Mental Edge in Trading. It's fascinating because all the other books looked at the research. It's a research book, looked at how losers think about the markets and themselves. Jason was the first one to clinically successful traders, and they think a lot different than you do. Their response is a lot different than the public's response. So that's the really good information that Jason was able to share with us. He has a new book he's been working on as well that I'm excited about. Will you resurrect your bond trading strategy and TradeStation? Here's a, yeah, I'll get to that in a moment. You can find new patterns and conditions, drop off ones that didn't hold up, consider different stops and exits, because systems are going to fall apart, come good, bad, whatever. So those are other things we can do with systems. I continue to monitor systems, because like that oil well, it might run dry. So I do monitor my systems because I'm actually trading them with real money in TradeStation. Unlike, I don't think anybody else does that. So yeah, I pay attention to these things. I've got money on the line here. You run all strategies in one account. So many questions here. The book is not even close to Jack Schwager's Market Wizards series. Do you run all strategies in one account? I've got several accounts, so they're not all in one account, no, to answer that question. So this is how you can improve. Look for new patterns. I'm still looking for things, thinking about the market. We found a couple things the last 3 or 4 years that have been really good, researched them. Actually, one was an idea I had. I was traveling and I had an idea. I was in Peru and I had an idea. Go, oh, I hardly wait home and get tested out. That should work. Sure enough, it worked. So thinking about these things is better than just running numbers, because running numbers, like I said, prisoners of war, beat them off enough to confess to anything. So what to look for in a system? Well, average profit per trade, that's a good one. I get asked about accuracy all the time. That doesn't mean as much to me. Accuracy is important, but I'm really concerned about my average profit per trade and what's my drawdown. What's my average losing trade is $1,400. My largest losing trade, that's really important. What if that largest losing trade was $35,000 to make $147,000? Not as good, right? Can you really forecast markets a week or a month in advance? Well, don't take my word for it. I think I've got some people here that have seen my forecast. I'll let somebody type in. Tell me if I'm right or wrong. Can we forecast these things 6, 7 months, a year in advance? Huh? Some of you, yeah, you can. Yep. Oh yeah, we've had some pretty spot on forecasts based on our forecast of what's happened in advance. Just this year, we've had a bunch of them. So yeah, you can do it in advance. Can I give the forecast for the E-minis for the next 20 days? Yeah, but I can't do it in this presentation, but sure, we did one earlier today on it. Actually, in TradeStation, we have my cycle forecast, and that's been really good, especially on intraday on a 30-minute bar chart. It's called most all of the recent highs and lows in the marketplace. You stick the Larry Williams cycle forecast in TradeStation, and you'll see it there. Okay, so those are some things I look at to see if a system is successful. But one of the things I really like to look at in a system, the largest winner versus the gross profit. So if I make a whole bunch of money, I don't want it to all come from one trade. That means I just got lucky one time. What form of money management do I use in trading today? I use a fixed risk ratio. In other words, I'm going to risk 2% of my account in every trade that I take. I don't want that large loser to be so big that it takes out, it's just an anomaly. I don't want that to happen. I do like to look at maximum consecutive trades, especially losing trades. Can I sit through 4 losing trades? Yeah, I can. You might not be able to. And this is a big one, big one. Average number of bars in my trades. How long do I have to sit in this position before I get rewarded? Think about it. If your average position is you're going to trade 10 days and make the same amount of money as if you're in it for 2 days, obviously it's a more efficient system to get in and out in 2 days than to get out in 10 days. So I like to see this somewhere in the area of 3 to 5 days. I like that. Are you an options trader? No, I don't trade options. I write options though. Is there a limit to the size of the E-minis S&P to trade? A couple questions here. The largest I've traded in the E-minis is 1,000 contracts. The largest I've traded in the bond market is 4,000 contracts. So I think that 1,000 contracts, you can move the market, and you have to enter your order with probably an iceberg order and be a little careful. But you can put in a 300, 400 lot contract and not get much slippage in it in the electronic markets. I actually think we get better fills in electronic markets than we did in the pit session markets. And if you're doing big volume, then you got to know about iceberg orders. One of the reasons that we stopped our E-mini system in TradeStation, I thought we had too many people trading it. We've opened it up again now because some people just naturally, oh, you had to draw down, whatever. Some go on to another market, another guru, whatever. Since I'm trading this with my own money, excuse me, I don't think we have 1,000 contracts. They're all buying at the same price. So we get up to about 20 traders in it. That's it. We're going to cut it off again because I have the same premonitions you do. I don't want everybody trying to do the same thing as I'm doing. Have you done studies on options? Yeah, we write options. We do a lot of stuff. My wife does a lot of stuff with options, and that's another story for another day. We actually have that's another story for another day. Okay, so average bars in trade is really important, and all of these we're just doing a one contract basis for all the results. This is over the last 11 years, but I think the important things are how long you're in the trade, how efficient or effective is the system. The accuracy isn't nearly as important as what that average profit per trade is. Can you get in and get out? Lots of money left for you. People know simple automation is going to earn you a living by trading with a low risk required and beating the market to boot. Creating an automated system from scratch may take years with no guarantees to succeed. Yeah, that's one of my big points. A system is just going to grind out hopefully 30, 40% a year. That would be phenomenal if it did that. Remember we talked about unreal expectations? People expect the system is going to turn $10,000 into $100,000 in 6 months. That ain't going to happen with my system or anybody's system. The expectation is wrong. You think this is going to be an easy thing to do. It isn't. You think you're going to have instant wealth. You're not going to have instant wealth. You're going to have a nice return on your money. But if you want more than that, go to Las Vegas. or just start trading off the tip of your pants, because a system is locked into certain parameters. It can't think about today. It only looks at today versus what things look like in the past. So your systems are limited in their performance because they're limited based on their knowledge of just past knowledge. Oh, yeah, well, that was Red Bones, and I wrote an article for about that. Red Bones, that was Red Bones making those trades for. What percent of your time is spent looking for new strategies? Oh gosh, well, I don't spend much time trading. Let me put it that way, because it's all automatic. So it's just like, I'll be trading tonight while I'm sleeping. So most of my time now is spent working with people and developing systems and trying to retire. Okay. Okay, let's go to our next slide. Trade with me. Well, if you want to trade our automatic E-mini trading system, it's there. It's in TradeStation. You can subscribe to it. Do you think creating auto systems is better on E-mini or Russell? I think it depends on your temperament. The Russell's a lot more volatile than the E-mini is. So that a little bit depends on which market you like. Larry, all of your strategies running simultaneous one program, yeah, in this strategy we're talking about today, we have probably 25 rules in there, or 25 patterns, if you will, 25 separate events, and all of those may give a signal or may not give a signal. But I found these unique conditions, and those are what are giving my signals. Sharing the same strategy with others is not a good thing for trading, is it? Yes and no, because most people won't follow it anyway. Vic Niederhofer and I were speaking in Japan a couple months ago, and Vic said, if I told you my system, you wouldn't follow it anyway. It doesn't make any difference. So I'm not going to tell it to you. People always want to change everything. So that's part of it. Do you plan to apply Kelly ratio? Kelly ratio is way too wild for trading a system, I think. Way too risk oriented. So you can manage your money however you want to. That depends on how aggressive you want to be. That's up to you, not up to me as a system developer. I know I trade my system basically on one contract for every $10,000 in the account. That's what I do. How many trades per year in the latest version? That probably trades about 30 times a year. So I'm not trying to trade every day either, because not all days are good days to be a trader on. I don't mind trading less. I'd rather trade less and more often, actually. I hope that answered that question for you. In addition to that, I also do my weekly commentary, Larry TV. If you want to know more about that, you could go to our website, ireallytrade.com. Which methodology makes the most money in your opinion? I'm not certain what methodology you mean, but let me put it this way. A systematic trader will not make as much money as a discretionary trader. Pure and simple. A discretionary trader that's good will make more money than a system trader that has a good system. Classic point of this came when I was having dinner at Steve Cohen's house, the most successful trader in the history of the world. I started as an art major in college, and I looked on the wall. Steve had a Rembrandt that was in my art books when I was in college. I go, wow, he owns that painting. Here I am, a system trader. He's a discretionary trader. Who's the smartest? Who's made the most money? Steve. He's a discretionary trader. Discretionary traders will make more money. But most of you, when you start to become a discretionary trader, don't know what you're doing and you lose money. So where are you, right? Discretionary traders, if you look at the performance of commodity trading funds, same thing holds true. Discretionary traders do better than trend traders, the automatic traders. Automatic system traders in a good year do 13, 14%. That's a great year for them. Discretionary traders, guys like Steve Cohen have done 30% for 20 years. Discretionary traders tend to do that better. But most of the public, folks like yourselves, can't make money trading. So what do? Well, you can subscribe to my system or somebody else's system, and you at least have a lot better shot at it, and you'll probably learn about trading, so maybe you can become a discretionary trader. Okay, your Larry TV is discretionary. Yeah, Larry TV say, hey, we've got to buy here, sell there, we think the market's going to rally, whatever. If you need to trade one strategy, one instrument, what would it be? If I could trade one strategy, one instrument, it would be the E-minis. And it would be the strategy I have at TradeStation. I'm trading real money with it. I mean, how more clear could I be about that, right? How much money would you recommend to have an account to start trading? I think, see, I trade differently than other people. I sit on a lot of cash on my accounts. On $1 million account, trading futures, I seldom will I have more than $150,000 of positions. Occasionally I have $200,000 of positions. I sit on cash, so I never get margin calls. I used to get margin calls all the time. I like cash is king. So to trade an E-mini in TradeStation, $15,000, 20 is probably you'll feel even more comfortable. Most traders are so squeezed, they only have $5,000. An email the other day from a guy, unbelievable. He's all upset about his position. He doesn't know what to do. I said, well, place a stop. You know, this is where your stop should be. He says, well, I only have $90. I'm trading Forex and I got $90 on my account. What? So you've got to be capitalized to be successful in any business. This trading is no different than any business. Number one cause of business failure, lack of capitalization. Guess what? Same thing in the market. You got 90 bucks and you're trading the market. Like, whoa. So I think I want to have cash, and you can buy T-bills with the cash or whatever you want to do. But okay, more questions. Why not trade more instruments at the same time? You're going to get confused. You're going to get off track. In my experience, at least, I'm content with the return on what I'm getting with a trading strategy. Maybe it's just, you know, guys and gals at my age, 73 years, I don't need to hit a home run anymore. I really don't. I've hit a lot of home runs in my life. Maybe that's just me. We're all different. You have to figure out what your emotional money management quotient is. So, and it'll be different in your life earlier and later. So there's a little insight for you. Could you ask one trader one question? What would the trader be and what would the question be? Oh, I don't know. If I had the ability to ask anybody one question, I'd really like to ask my father one question. That'd be a lot more important to me than a trader. We can trade okay. Which one of the books is best for bar patterns? Probably Long-Term Secrets of Short-Term Trading. Do you ever initiate trades in the overnight session? Yes, I do. Do you like to trade stock? Oh, yeah, you bet. I'm long stocks. I've been long stocks for some time. We're in a bull market, which we predicted a couple of years ago. Yeah, you can predict the future. You trade the same portfolio or would you individual contracts? I'm not certain, Patrick, what you mean by that. I do alter my stock positions a little bit from time to time. Okay, I think I've answered about most of the questions here, and we've gone probably plenty long enough. I'm certain I've bored you to tears by this point. So there's a couple takeaways I'd like you to take away. A, there are patterns that have been successful for a long time in the marketplace. You can trade off patterns. You need to test those patterns for stops and for how long you can hold those patterns. The bigger your stops will be, the more accuracy you'll have, but your system will degrade. The smaller your stop, the closer your stop is, the worse performance you'll have. So you don't want a big stop, you don't want a small stop, you want somewhere in between. Those are really important takeaway points in the marketplace. And hopefully you got the fact that charts don't move the markets. All these lines and whirligigs and Fibonacci numbers and all those things, I don't think they move the markets. My experience is conditions move the markets. So get in phase with the conditions that drive prices, and I think you're going to be a lot better trader. Wow. We've covered a lot here today. I'd like to thank you for being here. I hope I've been able to increase a little bit more of your understanding of the markets. Rotational models and relative strength and momentum, those work, but they're limited a bit in performance, but yes, they will make money. Okay, everybody. Well, we're going to wrap it up here. Thank you so much for being here today. I mean, you've got a lot of things to do in your life. I do look forward to seeing you in Chicago and other cities along the way this summer. Should be a good, nice last lap around the track for Larry Williams. And especially a great thanks to Stan Dash for setting this up, and Mike Burke and Joe Ferrio for being here today. A great group of people here. You know, one of my big lessons in the market is I have made some phenomenal friendships and relationships with people in the markets that have become dear friends of mine for many, many years. So it's a really good crowd of people here. There's a couple stinkers every now and then, but let me tell you, there's some wonderful people in this business, and I hope you get to meet them. So until next time, I'm going to wish to everybody good luck and good trading, and thank you so much for being here today. I really appreciate your support.
Larry, we all want to thank you for a great presentation once again. You're spoiling us, though. I do want to put up some other information while I'm here. First of all, this Joe's contact information. I'm going to leave that up for just a moment. And an offer code, if you'd like to open an account with us, we'd certainly be privileged to have your business go through TradeStation. And Joe does a great job at customer service. He's really outstanding at working with you. And in a moment, I'm going to put up a slide reminding you about Larry's live presentations coming up in September. We've talked about them a couple of times, but I will put up a slide about that as well. So if you want to stay with me just a minute, I'll click back and forth. I know some of you may have to run, but otherwise, if you've got a minute, here are some of the details. And let me put up this link as well. So those are some of the details, and I put this link up a few times where you can actually register for the events. We do, there's no charge, but we do ask you to register so we know how many people to expect, and we make a proper arrangement. So please do register. And those are the dates, as I said, Northern and Southern California, Chicago, and Florida, all throughout the month of September. Those are weekday evenings. You can see right up there local times. I'm going to drop back one slide so you can get the contact information for Joe. If you don't get that offer code or don't know what to do with it, someone was just asking Paul, you can just give Joe a call and he'll help you out with it. Mention there was, during the Larry Williams webinar on July 30th, but Joe will be glad to help you out. This is being recorded and the archive will be viewable through these 3 locations. It's the same archive. So don't worry about which way you see it. Some of you have our TradeStation app and you view our videos right through the app. Some of you might like to go to YouTube, especially if you're mobile, and others like to cruise around our site. So either of those 3 links will have access to the video probably on Monday, maybe by tomorrow, but otherwise on Monday. I'll pop around these slides again so you can get some other information. Other than that, I'm going to mute my microphone. I'm going to thank Larry one more time and, of course, my colleague, Joe Ferrio. Have a great evening, everyone.